and investors. This is the Wednesday stock report for um, for this week, and there's some great news to report, and want to just get right into it. First of all, for the the Fed decision has just come out today, and it's brand new, hot off the press. They've decided on a rate hike for the Fed discount rate. Just hot off the wire, and I want to let everyone know that they've decided to increase the discount rate by a much smaller margin than what was originally planned. We have a lot of consumer news to share with you, and corporate news, etc. So I want to continue with this. Some mixed signals out of Wall Street today. A lot of uncertainty before the Fed decision on the rate hike as to tentatively what direction to go with the market. Earlier in the day, we saw a lot of broad spectrum of hesitation with investors, including most particularly institutional investors who have a big market share in holdings. You also saw even corporate people just holding out. And globally, you also saw this day and Wednesday, where the Fed decision, the pending Fed decision, is causing the broader market share globally to be in waiting mode. Now that we have the rate hike decision that just came out before the end of close of business day today, being that it is actually 4:25 p.m. today, and by the time everybody gets to watching this video and reading all the information out of it, they'll get to understand how it's all going to affect and shape y'all for the middle of this week. As I'd said on the previous investment report, I think that it would become pretty clear if you look at all the chart data and underpinnings and the market volatility. As I said for Monday's report, that we're definitely headed for a rate hike. Well, folks, that's actually a conclusion, because it actually has happened now. I said that earlier in this piece. But there's economic news and job news to pass along to also all your good investment folks, and business and investment folks, I should say. You see, there's some good news and some bad news. So I'll start with the good, pretty news that everyone loves. The consumer spending is going up a little bit, and nationally. So that's helping business overall. Also, another piece of good news is that the wage increase, secular wage increase, I should say not secular, but went up a whole 1 penny. That's male-female inclusion on that. So we gained one whole penny on of a wage increase nationally in America. Now that doesn't exactly affect us globally, but it certainly does for general income level in America. Also, to add on top of that, there's another good piece of information that is very important. We also, as far as consumer spending, as I said, that also increased. But we also saw a deep reduction in inflation, which for this quarter is very important. Those things are relative to the overall GDP, general gross domestic product output of America. And for all you folks who want to know a little bit about GDP, it actually edged up surprisingly. Looking at data this week, I'd said earlier that it was going down, or that it would be possibly unchanged, but and that we're holding out for the report that was coming pending. But I see that looking at the current GDP data, that I'd made some kind of mistake on that, so I'm just going to correct it. GDP actually went up 4 points. That's pretty significant for the gross domestic product. An average of 4 points is a good output increase. Also pass along to you some very other critical information on this. That we'd also experienced the Treasury input on how we're going to deal with the T-bills and bond issue and bonds. The flip side is that T-bills went down in value. And there was a major bond sell-off that happened earlier from Monday all the way to earlier part of today. Because of market nervousness, all the horses were running out the door on bonds. Major mass exits on the bonds, and T-bills took a big hit on that too. So that's whenever you get that kind of thing, that makes stocks go usually go the opposite way. It usually increases in value. Not necessarily always, but usually it does. Well, this time around, you see global growth on major indexes growing by about 1%. That's an average on 1% on that on global in all the different global indexes. However, Asia markets were still down as of reported today, and that definitely affects our overseas partner relationships with through corporate America and investments. Canada was mixed. Canadian Stock Exchange was mixed, and also the DAX and other major reported exchanges were either mixed or slightly up. So for Wednesday, we're looking at a lot of extreme volatility, but now that we know where we're headed with the Fed and how things are going to shape up for the middle of the week, now I'm going to look ahead and see where we're going with this. I think we're going to see a leveling out on the playing field here with how investments are going to be. I think you're going to see the market jitters start calming down there and actually making something really important happen. I think if you want to go ahead and buy in on the top, you're not going to do very well because I'll explain why. There's still a glut of stock out there, and even bonds now that are flooding the market. So I mean, that's going to affect everything. That may seem illogical to people, but seriously, when there's a flood like that, there's got to be some kind of depression happen, and I think that's what we're going to see happen next. It's a market contraction that's going to happen, where people suddenly realize that all that glitters isn't gold. It's going to be a small contraction, probably start about Monday next week. I figure probably by the door will open Monday next week, and you'll see a contraction on the market where people realize that there's too much out floating around out there, and not enough coming in. So I think you'll see that happen. How much we're going to see on that contraction, I'm going to say as a prediction, probably about 27 points on the contraction, where people notice that they look at their portfolios and they're seeing that things aren't being as productive. They're going to try to sell. They're going to hit the panic button and on the sell trigger, and that's going to cause some more market worry. Overall, general Dow and Nasdaq market worries. S&P will be reflected on that too. So I think you want to consider all these different aspects. So this is where I think we're headed for opening bell on next Monday. We'll see what happens when this week progresses and we get to Friday's closing bell, and I'll end it right here. But so far, this is the way I see with the chart data and everything that I'm looking at. It's just pretty conclusive. Economic news and everything else that's coming out for Wednesday of this week. Take care, everyone. Enjoy your day today, and have a blessed day. This is John Norton. Thanks. Bye.